Bitcoin just crashed, dropping over 20%. In just a few weeks, prices have plunged from nearly $126,000 down to below $100,000. The first time since June, over $1 billion in long positions have been wiped out overnight. So what's really happening behind this massive dump? Who's selling and what comes next? Today, we'll break down the real reasons behind Bitcoin's crash, from whale movements and liquidation data to macro trends and key price levels. After peaking around $126,000 in early October, it's now trading below $100,000, a sharp fall of more than 20%. In the last 24 hours alone, over $1.14 billion worth of crypto long positions were liquidated. According to CoinDesk, that means traders betting on higher prices were forced to sell at a loss, accelerating the crash. Meanwhile, Ethereum, Solana, and most altcoins followed, dropping between 5%, 15%. Why Bitcoin is dumping? There's no single reason. It's a combination of factors shaking up the crypto world right now. One, macro environment. The global economy is tightening again. The US Federal Reserve kept interest rates high to control inflation, and that's pushing investors away from risk assets like Bitcoin. A stronger dollar and weaker stock market are creating additional pressure. Two, whale selling. Whales, the big holders, have been offloading massive amounts of Bitcoin. Data shows more than 400,000 BTC, worth roughly $45 billion, moved out of long-term wallets in the last month. That's the largest selling wave since early 2022, signaling that even long-term holders are taking profit or de-risking. Three, liquidation cascade. As prices started to fall, traders using leverage began getting liquidated. Each forced sell pushed prices lower, triggering more liquidations, a classic domino effect in crypto markets. 4, technical breakdown. Technically, Bitcoin broke through key support levels around 105K and 100K. Once these levels failed, panic selling followed, bringing us to the current zone near 95K, 98K. What this means for investors. So what does all this mean for investors? For short-term traders, volatility is back and risk is high. Many traders lost their positions overnight because of excessive leverage. But for long-term believers, this could also be an opportunity. Historically, Bitcoin corrections of 20%, 30% happen even during bull markets. Still, caution is key until Bitcoin finds clear support. Entering blindly can be dangerous. Need to watch. Bitcoin has officially entered a correction phase. What could happen next? Here are two main scenarios analysts are watching. Scenario: recovery bounce. If Bitcoin can hold above 95K, we could see a short-term bounce back toward the 110K, 115K range. That would suggest buyers are still defending this zone and market confidence remains intact. Scenario 2, deeper correction. But if it breaks below 95K, there's little support until around 90K, 88Ks. Below that, the next major demand zone is closer to 80K. On-chain data also shows decreasing new wallet activity, meaning retail traders are cautious. Google search interest for Bitcoin has dropped nearly 30% in the last 2 weeks. Big picture perspective. Despite the recent panic, Bitcoin's long-term story hasn't changed. Institutional interest is still strong. Major companies continue holding Bitcoin in their balance sheets, and the next halving is just months away. Volatility has always been part of Bitcoin's DNA, but long-term holders who survived previous crashes know that patience often pays off. Conclusion. So is this Bitcoin dump the start of a deeper bear market? Or just another shakeout before the next big move? The truth is, no one knows for sure. What we can do is stay informed, manage risk, and avoid emotional trading. Let me know what you think in the comments. Are you buying the dip or sitting on the sidelines? Thanks for watching. If you found this breakdown helpful, hit that like button, subscribe, and turn on notifications so you don't miss our next crypto market update.